Welcome back to Trading 360. I'm Nicole Petalides, live in New York City. Thanks for being with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts, and here to take us through the trades, Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Thank you both so much for being with us. So we'll start off with SBUX, right? This is one on your radar here. 25% off the September top. Tell me a little bit about this one. Why did you jump on this one, Alan? Thanks for being with us today.
Sure thing. So this is cold coffee, or I would probably even say iced coffee. If you look at the drop here, it's had a major fall from this top. And it had traded between 105 and 125 before the breakdown. Markets often come back to the breakdown points. This 85 level was the measured move, that $20 range, subtracting from 105. The 85 was the measured move target, and that's held as a super support level. So I'm looking at a July 85 call, a stock substitution strategy that I do. That option's trading for about 10. Gives you the right to be long from 85, a super low level here. We've got bullish divergence, which sets up a stock for a bounce. You can see some short covering after this extensive downside. Sellers now have run out of strength. So this option has 4 months of time. And if we get back to the 100 level, this option will gain 50%.
Yeah, what do you think of that, Ben, when you take a look at that?
Well, I think that we've seen, good morning, first of all, Nicole, and Alan, good to be with you this morning. We've seen a grande move. Alan mentioned how it's iced and it's cooled off quite a bit, to say the least, but a sharp move lower from the 117 handle, Nicole, all the way down to 86. Now, I can see what Alan's looking at here in terms of this 100 level. He mentioned if we could get back to there. That's significant. It's really the upper extreme of the most recent area of consolidation that we formed, and I think what we're going to need to see is a bit more of a rejection of this lower level first. So 85 is a key level, as Alan mentioned that as well. We can get into that in just a second, but a bullish divergence, and again, we'll talk about that when we look at the daily in a minute, but here you can see on the 60, the selling, again, as mentioned, the big move. We kind of double topped up here around 117, as mentioned, down to 86. But here's the daily time frame, and you can see that, well, the huge move off the pandemic lows that they saw, 50 all the way up to 126. I remember back in the pandemic, my brother, for example, and his kids, they used to take a destination day to Starbucks. It was basically the only thing open. They would go through the drive-through, and I didn't really understand it myself, but I'm not a big coffee drinker. Anyways, you can see some of the selling we've seen since as we've come off. Now, I do want to kind of get back to that bullish divergence that Alan was talking about. And one thing I noticed is the RSI is coming off a lower extreme here right now. We're starting to see volume, which has been kind of limited recently, but you saw that big volume spike when we sold off on the way down here and kind of bottomed out or went sideways around this 96 level. But basically, again, I'm noticing we're below the 200, below the 50. Nicole, again, you know how I feel about it. I'd like to see a little bit more strength, but I can see how we're bouncing off this key level. 85, 86 is going to be a big area, and if we could build some momentum, some strength to the upside, again, I think we could easily retest that 100 level that Alan has his eye on. It's just the upper extreme of that range, and oftentimes when you fail attempting to break out below and take out key levels, you just work your way right back into that range. There's a good possibility that happens here.
Yeah, and it really feels like it fell off there. I mean, I know you're watching the divergence now at this point, Alan, and Ben showed us exactly that, how it went from 117 right down to these low 90s. It felt very fast. Sometimes you feel like there's a bounce after that if the company is still fundamentally in the right place.
Well, obviously, Starbucks is fundamentally in the right place. That's not going to change. I think it just got overdone to the downside. I use options as a way to try and find a gentle bottom. I'm not predicting the absolute low, but I'm being in position for success when that bottom base is in place. And we've seen that in the fact that it made new lows, but not new highs and implied volatility. That's a very, very positive sign that the short sellers have kind of run out of juice. And what you'll see is there's a lot of built-up stops above the market from people that have been short that have been locking in their gains. And so once it does get a bounce, it'll feed on itself, and that'll push it higher, and you'll see a little bit of a bottom bounce, and that's what I'm looking to take advantage of with a limited risk option that has plenty of time, more than 4 months of time. A lot can happen, obviously, between now and July, but I love the risk-reward on a solid company like Starbucks.
Yeah, and I think you make a good point too with the trade being on a longer scale, right? It's not for next week or a quick trade. Let's turn our attention to Walgreens Boots Alliance. So we'll take a look at this one. Alan, you brought us this one. Why did you do that? Why is this one on your radar? Tell us all about it.
Again, another bad enough to buy scenario. This is a solid company, 50% off its 2015 highs. So it's got a long ways to go to get back to where it was, and it's down 20% off its April of last year's top. It's stuck sideways between 45 and 55, so we've seen a double bottom here. These trades are technical for me. Ben and I are nothing but price guys. I don't usually study anything fundamental about the companies. I look at the price pattern. So 50 is an important midpoint. If we can get back to that, then it can get to 55 would be the range top. It's range bound. I like the risk reward. Again, a July option here. A July 40 calls trading for about 750, 4 months at a time. And if we get up to that, just to the top of the range, not asking for a whole lot, that option is going to gain 100%. So it's about risk reward. And we've seen it kind of stagnate, but I do like the bottoming formation here. And again, it's a longer term play looking for a bounce. Macro market, in my opinion, has a lot of question marks, but I'm much optimistic than your previous guest here. He listed the reasons we are at these levels, and that's why we're here. Where we go from here after the test and reject in the S&P last week, that's very significant, and that's how the markets have made a bottom every time in the last decade. Let's see if it happens once again.
All right, so feeling a little bullish there, and tell us, Ben, when you take a look at this chart.
Well, when I look at the indices, I think, Alan, we may have made a bottom there in terms of the rejection of the test below the January lows. But when I look at these two stocks, again, Starbucks and in this instance, Walgreens, I'm not sure that we have made that bottom yet, because if you take a look, well, let's dive into the 60-minute time frame here. And I didn't really point this out with Starbucks. I meant to, though. I wanted to mention how the ES, the NASDAQ, the Dow, the Russell last week took out the January lows, but spent very little time below them. Here you can see this is the move from 56 WBA at the beginning of January all the way down to 44 recently. And again, taking out the January lows, and they really have yet to look back at this point. Similar situation in terms of Starbucks. Now, I want to point out that we held a key level, and take a look at the daily time frame, and I'll show you why. That 33 level I think is important, and what I've got my eye on right now is this upper extreme around 65, the highs that we saw back in the beginning of November, and then we sold off down to this low again around 33 end of October, and since then we've kind of just been filling in this range. I always talk about these bell curves that I you see play out, and here you have the well-defined upper extreme, or that tail at the upper extreme, the lower extreme, or that tail where you spend, again, very little time. So we've got some build up here right now, and one thing I wanted to point out is if you take a look at the daily time frame and pull some moving averages, again, you can see in this instance below the 50, below the 200, again, into this overextended period in the RSI, it kind of dipped down below that key level. It's starting to inch its way back up. So similar pattern in terms of Starbucks. There's something to be optimistic here about, but I personally like to see a little bit more momentum, a little bit more energy, and on the smaller degree time frame, on the 60, for example, I want to see those kind of that pattern, that trend to the downside start to reverse, bottom out, and start to work its way back higher. I don't necessarily have to be the first to buy the bottom, but again, I like to see a little bit of strength before I get excited about a stock that's been selling off basically since the beginning of, for 7 weeks, beginning of January.
And I know you look at those moving averages, Alan, right, that Ben's pointing out.
Well, Ben's a not yet guy, all right? I'm in position, and when I see it cross, and when I see it take out those relative, swing resistance levels, that's what I confirm that I'm right. So I've got plenty of time to be in position, like I've said, for that turn and to be right. And then when it does rally through those levels, I'm already in. So it's the approach that I've always taken, being optimistic and bullish these markets. It's risk reward as well. I'd rather be, getting into an option position deep in the money. Again, the $40 call, we haven't been to 40 in a while. So I have the right to be long from 40, and I've got a July option with 4.5 months of time for something to happen. So it's like being long at a super discounted level, and I can see how the markets react. And if we don't push through some of those levels, that would be confirmation. Then I might regroup and pay attention. But again, I have a deep in the money option that's going to behave very well if and when the market moves my way.
Right. And I know we got some good earnings from Walgreens and CVS after all the COVID boosters and all that. And so, now they have to turn it around because they're not going to be giving the same amount of shots. But the idea here is that these are essential, right? I mean, there's nothing like your local drugstore. Let's move on and talk about EVgo, which is an interesting one here as we take a look at a longer chart. I see it at $10.29, but wow. What a spike late last year, and then now what? Alan, tell us about this wild chart.
Well, this is a Peter Lynch trade. This is a go for something you know. Now, I'm looking for EVgo to go. Again, I didn't know anything fundamental about this company. I stumbled across it in my personal life, and I saw the chart. And so we had made some money on it in the past, and now it's come all the way back down to its original breakout. And it's made some new relative lows here. So it has a $7 extreme low. It's traded between 8 and 11 here for a period of time. A breakout of that range targets 14. Also bullish divergence here, new lows, and it's setting itself up for a squeeze one more time as well. I'm looking at the May $7 call. Again, $7 is that extreme low. That option is $3.50, and it's about $3.25 in the money. If it does have a bounce here, the midpoint of this drop to the top is about 14. That option would double in value. So again, I'm long, have the right to be long from $7, which is the forever low in this stock. And it's got some potential for a bounce here after this big decline.
Yeah. And what do you think about this one when you take a look at this? I mean, big decline is right. Ben?
Well, of the three guys, this is the one that I can get most excited about. While we haven't really we haven't started to take out any areas that we established on the way down yet, but we might be starting to bottom out here a little bit and dive into the 60-minute time frame with me. I'll show you why. Remember, I was talking Starbucks and Walgreens taking out those January lows, and they have yet to look back. Well, much like the indices, the ES, the NASDAQ, the Dow, the Russell, EVgo has yet to take out the the indices took them out, but they're back above them. EVgo still never even took out the Jan lows. So Alan mentioned the $7 level, how he's looking for it to potentially get back to 14. That's that spike high, if you remember, we saw back in the beginning of December. Now, there's not a lot of data on this stock to go back to and take a look at historical price activity, but I do think, again, that probably a better representation of the bid that's been coming into play in the ES, the NASDAQ, the Dow, the Russell, and again, strength in EVgo relative to those broader base indices, as EVgo never took out those January's lows, which is significant. But here you can see 19 down to 7, as Alan mentioned. And as we move away from the 60-minute time frame, taking a look at the daily, here you can see again how, we've seen a series of lower highs come into play. The stock's been under pressure basically since, December of 2020, now November of 2020. I did want to take a look at where things stand relative to the 50-day moving average. You can see how we're just kind of in between right now. The purple line's that longer 200-day, the blue's the 50. RSI's kind of in the middle, working its way back up, so sort of supportive of Alan's idea that we could see 15. You can see here on the weekly or on the daily time frame that slide as we came off that 14 level. It looks like 4 or 5 days to the downside. That's what got them below the 200, and they've stayed below it since. Again, that was back in the middle of December, but I'm looking at volume, which seems really light here right now as we come off this low, which again, I think the bulls would want to see volume increase a little bit, see that RSI start to uptick here some, and yeah, we could get some momentum to the upside here, potentially a bottom forming. Again, it'll be interesting to see if we can take out some of those key levels that were established on the way down.
All right, we're going to have to leave it there. I love this. Alan, I'm glad you were able to join us today and talk about this. I love your not yet on Ben. I just think it's great. Thank you so much both for taking a look today at Starbucks, Walgreens, and EVgo. Today is our big three. Alan Nuckman, thank you. BullseyeOption.com. Ben Lichtenstein, thank you every single day taking a look at the big three. Always a pleasure. Coming up.